Hi, this is Tony English, English Realty, once again coming to you to give you some updates on the market. Everybody seems to be talking about interest rates and they're going to wait for them to come down. And they say, well, when they get down to 3.5% and 2.8%, that's when I'm going to start looking for another house and move up or do my investment or whatever. And I just want to make a case to you as to why that's not going to happen. We're not going to see those interest rates again unless we have a depression. The only reason those came around was because they flooded the market with money during COVID and they were trying to keep the economy going. But we're not going to see that again in probably another lifetime. So what's going to happen is, everybody's talking about Jerome Powell lowering the interest rate. Well, all that is the short-term interest rate for the government to borrow for overnight and very short term. And the reason the government wants that low is because they need to refinance the money they borrowed at a lower rate. But what happens is when you lower the interest rates, then it causes a flood of money into the market, and which that causes long-term interest rates. Gold has gone up to above $4,000 because all the countries in the world and big institutions are buying gold because they know what's going to happen to bonds. They used to buy bonds all the time, and now they're not buying bonds anymore. I mean, they are, but not at the rate that they used to. China's putting gold kiosks around the world in different countries so that they can change the world reserve currency into the yuan. So what we're going to have here is a changing situation in the world, and the bottom line is the Treasury can just issue bonds to raise money, and guess what? The Federal Reserve just prints money and buys those bonds, and they buy them to keep the interest rates lower, to keep the government to be able to buy bonds at a lower interest rate. But what happens is that just causes long-term rates to go up because everybody knows that's smart, that's going to cause inflation. And so what's going to happen is, and also the Federal Reserve is doing something called yield curve control. What they do is, because no one's buying the bonds, the rates of the bonds go up and up and up, which costs a lot of money to the government. They're borrowing almost $2 trillion a year, and then most of that is they have to pay interest on it, so they borrow more money to pay the interest, and they borrow more money to pay the interest, and when the interest rates go up, it gets worse and worse. It's like a positive feedback loop that's causing a big problem. The only solution to this for the government is to print. And when they print, it means there's a lot of dollars and limited assets, and so the assets go up in price and the dollar goes down in value. So if you have real estate, you're going to do very well. But the thing is, people who are waiting to get into their investments or into a new house or a bigger house or their dream house, they're waiting for interest rates to go down. It's not going to happen. It's going to be too late. So I really think that you need to consider buying or moving right now. When you get something under 7%, that's going to be historically low. And just think about it. Down the road, if rates do go down, and they could, if we have a real high production rate of something new like free energy through fusion, or if we get AI doing everything for us, and that could cause what's called deflation, and that could cause interest rates to go down and productivity to go up, and that'd be a good thing. But that's already priced into the system. Everybody knows that AI is going to be helping a lot. It's just not going to, in my opinion, it's not going to cause deflation. The government is in trouble. They have $38 trillion in debt, and they just keep borrowing more and more and more to pay that. The interest rates, the money they pay on interest is bigger than what they pay on any other item, including the military, Medicare, healthcare, welfare, everything. So just the interest they're paying. And so it's a positive feedback loop that's growing and growing and growing. So what does that mean for us? You should buy real estate now. And if the rates do go down, you can always refi. A lot of these lenders will refi for free. You can make a deal up front. If it goes down, you'll refi. So that's what I want to tell you about, and I really hope that you listen, and down the road, you're going to look back and go, wow, he was right. So your house will go up in value, and your loan value will go down. The money you pay back in the future will be really easy to get compared to now. So, and your house is going to go up in dollars, not so much value. Well, there is a limited supply of houses, they'll go up in value, but the dollars it takes to buy houses, especially in this area, is going to be phenomenal. I don't even want to tell you what I think it'll be because you'll think I'm nuts. But I'm telling you, Now's the time to dial in your dream home or do your investments or buy your rental. Whatever you're going to do it now, because we have a future that's going to go off the cliff, and the rich are going to get richer and the poor are going to get poorer. People who own assets, gold, silver, equities, homes, Bitcoin, those kind of things are going to get wealthy because they're going to be able to buy things a lot cheaper. Anyway, that's my speech today. So give me a call if you want to buy, sell, or invest in real estate or have any questions about real estate ever. Just call me. All right? Thanks. Bye.